Welcome. Today we dive into the world of legendary investor Warren Buffett, often called the Oracle of Omaha. Buffett is renowned for his sharp investment acumen and ability to spot opportunities where others see only risk. In this video, we'll explore one of his most remarkable investment stories, his bold bet on BYD, a Chinese electric vehicle company. We'll uncover how Buffett turned a $230 million investment into a staggering $7 billion and why he ultimately decided to sell. Let's begin this fascinating journey into the mind of a true investment genius. Year was 2008, and the world was gripped by a severe financial crisis. While panic spread across global markets, Warren Buffett and his trusted partner Charlie Munger saw an opportunity. They decided to invest in BYD, a relatively unknown Chinese company specializing in batteries and electric vehicles. Berkshire Hathaway purchased 225 million shares, securing a 10% stake for about $230 million. At that time, BYD's total valuation was just $3 billion. This bold move set the stage for one of the most successful investments in modern history. Back in 2008, BYD was far from a household name. The company was known mainly for its battery technology and had just begun venturing into electric vehicles. Many investors were skeptical, but Buffett and Munger saw potential in BYD's vision and innovation. Their decision to back BYD was not just about numbers, it was about believing in the future of clean energy and electric mobility. This early faith would soon be rewarded, as BYD began its journey toward becoming a global powerhouse. Over the next 15 years, BYD's growth was nothing short of extraordinary. The company focused on developing advanced battery technology and producing affordable electric vehicles. As the world shifted towards sustainable transportation, BYD's sales soared. Competing with giants like Tesla, BYD quickly became the #1 electric vehicle brand in China. Its market capitalization skyrocketed from $3 billion to an astonishing $130 billion, marking a growth of over 4,000%. BYD's journey wasn't easy. The company faced fierce competition from established players like Tesla, as well as emerging Chinese brands such as NIO and XPeng. However, BYD's focus on innovation, affordability, and local market understanding helped it outpace rivals. Its ability to adapt quickly and deliver value to customers made it a dominant force in the electric vehicle industry, both in China and globally. Let's look at the numbers. Buffett's initial $230 million investment in BYD grew nearly 30 times over the next 14 years. By 2022, Berkshire Hathaway's 10% stake was worth almost $7 billion. This incredible return is a testament to the power of long-term investing and the importance of spotting value before the crowd. It's no wonder this investment is considered one of the greatest in Buffett's storied career. Buffett's approach to investing is rooted in patience, discipline, and a keen eye for value. He often says, "Be fearful when others are greedy and greedy when others are fearful." His decision to invest in BYD during a global crisis perfectly illustrates this philosophy. Rather than following the crowd, Buffett trusted his analysis and took a calculated risk, which paid off handsomely. One of the key lessons from Buffett's BYD investment is the importance of patience. He held onto his shares for 17 years, allowing the company's value to compound over time. This long-term approach is a hallmark of Buffett's strategy and a reminder that true wealth is often built slowly, not overnight. By 2022, BYD's share price had reached new heights. For Buffett, the question became, when is the right time to exit? Selling too early could mean missing out on further gains, while holding too long could risk losing profits. This is a classic dilemma faced by every investor, and Buffett approached it with his trademark discipline. Starting in 2022, Berkshire Hathaway began to gradually sell its BYD shares. The process was careful and deliberate, with shares sold in small batches to avoid disrupting the market. By 2024, Berkshire's stake had dropped from 10% to 0%, and by March 2025, all shares were fully sold. This marked the end of a historic investment journey. Why did Buffett decide to exit after such massive gains? There were several reasons. First, competition in China's electric vehicle market intensified, leading to price wars and shrinking profits for BYD. Second, Buffett's investment discipline told him that with BYD's share price so high, future growth potential was limited. Finally, there may have been more attractive opportunities elsewhere, prompting a strategic shift. The Chinese electric vehicle market became a battleground, with companies like Tesla, NIO, and XPeng fighting for dominance. Price wars erupted, and BYD's profits began to feel the pressure. This challenging environment made it harder for BYD to maintain its explosive growth, influencing Buffett's decision to exit. Buffett's decision to sell was not emotional. He followed his core principle, be fearful when others are greedy. With BYD's share price at record highs and many investors piling in, Buffett saw it as a signal to book profits. This disciplined approach is what sets great investors apart from the rest. Another reason for the exit was the possibility of better opportunities elsewhere. The investment landscape is always changing, and Buffett is known for reallocating capital to where he sees the most value. By selling BYD, Berkshire Hathaway freed up resources to invest in new ventures and sectors. By March 2025, Berkshire Hathaway had fully exited its BYD investment. This marked the close of a 17-year chapter filled with vision, patience, and remarkable returns. BYD publicly thanked Berkshire for its trust and partnership, highlighting the mutual benefits both companies enjoyed during their long association. What can we learn from Buffett's BYD story? First, the value of a long-term vision. Buffett held his shares for nearly 2 decades. Second, the courage to act when others are fearful. And finally, the discipline to book profits when the time is right. These lessons are timeless for any investor. Buffett's patience with BYD is a masterclass in long-term investing. Rather than chasing quick gains, he allowed the company's value to grow over many years. This approach not only maximized returns, but also minimized risk, showing that time in the market often beats timing the market. Buffett's investment in BYD during a global crisis is a perfect example of value buying. He saw potential where others saw danger, proving that the best opportunities often arise in times of uncertainty. This mindset is what separates great investors from the rest. Another crucial lesson is knowing when to book profits. Buffett didn't let emotions cloud his judgment. Once his investment objectives were met, he exited with logic and discipline. This approach ensures that gains are protected and capital is available for new opportunities. Buffett's BYD story serves as a blueprint for investors everywhere. It shows the power of research, conviction, patience, and disciplined execution. Whether you're a beginner or a seasoned investor, these principles can help guide your own investment journey. In summary, Warren Buffett's investment in BYD is a testament to the power of vision, patience, and discipline. From a bold bet during a crisis to a legendary exit, this story offers valuable lessons for anyone interested in investing. Remember, true investors think long-term, act with courage, and always stay disciplined. Thanks for joining us on this journey through one of the greatest investment stories of our time.